Today is April 29th, 2016, and this is the ADM Investor Services Weekly Market Wrap-Up. Happy Friday to you both. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Mike Niemiec, our Grain and Oilseed Research Analyst. Alan, we'll start with you. On Wednesday, the Federal Open Market Committee voted to keep interest rates unchanged at 25 to 50 basis points, with one member arguing for a 25 basis point increase. What is the outlook for Fed policy for the rest of the year?
Well, contrary to what the Fed told us several weeks ago, in their opinion, they thought that they would be raising rates 2 times this year. Our feeling is that there is probably only one rate increase coming from the Fed, and that feeling is enhanced by the GDP that came out yesterday, only up 0.5% against a guess of up 0.7%. So we're thinking only one rate increase, and the financial futures markets are backing us to some degree, indicating that there's only a 70% chance that the Fed will raise at the December meeting.
Yesterday, most stock index futures globally, including U.S. stock indexes, came under pressure on news that the Bank of Japan failed to add more stimulus to its economy, and also after the first quarter, U.S. gross domestic product increased 0.5%, which compared to expectations of a gain of 0.7%. What is the outlook for stock index futures in the short term, the medium term, and the long term?
Okay, in the short term, we are seeing some follow-through weakness with those 2 negative events putting some pressure on stock indices yesterday and some follow-through weakness today. I'm thinking we can find some support in the S&P around the 1235 area. In the medium term, I think we can turn this market around and trade higher. And in the long term, I think there is a lot left to the upside. In fact, I think stock indices can advance through this year.
Gold and silver futures traded above downtrend lines, and there has been follow-through to the upside. Is there further upside potential?
Absolutely. There's been some spectacular gains over the last couple of days, and the gold market is closing in on the 1300 level. Silver is getting close to $18 an ounce. So I think this is just the beginning of a bull market for the precious metals. And what we're seeing is China becoming more aggressive in their buying of commodities in general. So we do believe that China has turned the corner from an economic point of view. And I want to stress that this is very much a minority view that we hold. Most analysts do not believe that's the case, but we do. China is turning around, and that will support the precious metals through this year. So look for continued gains and new highs in gold and silver.
Mike, this week grains have tried to rally, led by soybeans. Any reason?
Well, as a backdrop, as Alan was talking about, the outside markets, a little bit of supportive feature there. But I'll also say 2 other things. Number one, the Chinese government wants to go and get rid of their grain stocks. And as a result of that, that is out there taking their grains down versus perhaps the world trader that wants to go and think about maybe being long soybeans versus short the grains. And then number 2, the other reason why I think is that we had a prospective plannings report that came on out, and that was at the end of March, and we saw where the corn plantings were a lot larger than what the trade was looking for, and the bean plantings a little bit shorter. So I think those are the 2 things that the trade's looking at this point in time as far as driving beans versus grains.
On May 10th, the USDA will release the new 2016-17 supply and demand estimates. What are we looking for?
So what are we looking for as far as, so if we're just talking about prospective plannings report, we're still looking at if we have decent weather, and I'm looking out the window right now and it looks kind of sloppy out there, but if we go forward in here and have the 93 million acres of corn being planted, we're going to be looking at, in the sense of a 2 billion corn carryout going forward in here. So once again, where does that put us price wise? Kind of still in this $3.50 to $4 price range going forward in here. For the soybeans, now once again, are we going to go and have a shift because of the fact that we've seen where the bean corn ratio has gone very positive towards the beans? Are we going to go and find out we're going to have more bean acres going forward in here? We won't know that until June. So where does that put us price-wise going forward? It is a quandary in the sense that we have been between $8.59, and now we're at, how do you want to say it, 9 to 10.50. Do we go and have a little bit of a problem going forward in here? And I know what you're probably going to ask next, because that's going to be the biggest quandary going forward in here. So anyway, price-wise, $8.50 to $10.
The U.S. corn crop is getting planted at a record pace. Is this good or bad? And what is the U.S. summer weather forecast?
Correct. So here's the quandary with the beans and the situation with what's been going on with the Chinese policy, with the prospective plantings. We're not going to know what's going to happen until the end of June when they come on out with the final acreage. If we are going to go be shifting into a La Nina period, if we do find out that we are going to go and have a good corn crop, and find out that if the acreage for beans is going to be a little bit smaller, and if we have a August, September problem, the bean carryout is going to be coming on down, and I think that that's what's been also been driving the, how do you want to say it, bean prices versus the corn to this point at this time. So,
Thank you. Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company.